Taking a look next here at a social media post courtesy of the Associated Press. It says this: breaking oil prices soared past $114 per barrel for the first time since 2022 on Monday as the Iran war intensified, threatening production and shipping in the Middle East. A lot to get to in terms of where this is headed next. So to do that, I'd like to bring into the conversation now Rockford Weitz. He is a professor of practice of maritime studies at the Fletcher School at Tufts University. Rockford, good morning. Thanks for joining.
You're welcome.
So I know that you're following this very closely. A lot of people concerned because they are seeing those prices shift there at the pump. But let's start with this. How much of this current spike in prices is really driven by the disruption there to the Strait of Hormuz, or versus what people expect could happen in the coming days as this war intensifies?
Great question. I think most of it is related to the temporary disruption in the Strait of Hormuz and the fact that the marine insurance was temporarily unavailable as the markets were trying to figure out how to price everything from a marine insurance perspective. And therefore, the oil traders who pay close attention to that — I used to be an oil trader — so that they would also price in. It looks to me like it's a short-term price spike, and over the long term, it looks better, just looking at oil futures this morning. But there's a lot of uncertainty in how long it takes to effectuate change in Iran's government, whatever that looks like. It's a little unclear to me exactly what the end game is. But there's a lot of uncertainty. But if you look at where the oil prices are, certainly the longer term ones, it's back down to 70. So I think it's going to be short term.
That's interesting. And I want to talk about maritime insurance in just a second here, just to give an overview to some of our viewers here. Before we do that, though, I want to bring us out to this. It's a live radar look that we actually have over at the Strait of Hormuz. So putting it up here on the screen, and just some more background context for our viewers, Rockford. So for anyone who doesn't really follow maritime trade closely, why is the Strait of Hormuz so critical to the global oil market?
Okay, great. Well, this is right up my alley. I've been studying what are called strategic maritime choke points for now 25 years. The Strait of Hormuz is considered the most important maritime choke point for the exports of liquefied natural gas and crude oil. Moving, essentially, if you're looking at the screen here, the map, moving from the Persian Gulf or Arabian Gulf, depending on what you call it, out through the Arabian Sea to the Indian Ocean and then the Indo-Pacific are liquefied natural gas flows. Qatar is the largest exporter of liquefied natural gas. Mostly goes to China, Japan, South Korea, Singapore, and others in Pacific Asia. But also a lot of crude oil exports from Saudi Arabia, Kuwait, Iran as well, and the Gulf Cooperation Council countries. That also goes from the Gulf into the Arabian Sea and Indian Ocean and beyond. And then it goes through actually another important strait, Strait of Malacca. Now, coming into the Strait of Hormuz are a lot of food, manufactured goods. Mostly all of this is coming in on container ships, and it goes to Dubai and other container ports in the world. So roughly about 20% of oil flows pass through the Strait of Hormuz on a daily basis. So it's very important, and I'm happy to elaborate on any of that.
And we will be elaborating on that. This is just a map that I wanted to bring up here for our viewers as well, just to give more points here as to really what we're talking about and give people a visual. Now, Rockford, that you have explained how important and why it's so important, the Strait of Hormuz, when it comes to some of this traffic, global shipping, oil, and stuff like that. If tankers need to avoid that, are there any routes that they can take actually to just bypass all of that and make sure that their shipments do get to their intended destinations?
This is the great differentiator of the Strait of Hormuz from the Bab el-Mandeb and the Red Sea and the Suez Canal. There are alternatives to the Red Sea. That shipping was disrupted by the Houthis and an Iranian proxy group last year, as I'm sure you know. The Strait of Hormuz does not have that alternative from a maritime perspective. It does have pipelines that cross Saudi Arabia, and there's some pipelines that cross from the Gulf Coast of the UAE to its Arabian Sea coast, which is Fujairah. And you see a lot of oil tankers sitting off of Fujairah. That's normal. It's a very popular docking place for them to refuel and also to get food for the crew. And so that map you showed earlier showed a huge amount of oil tankers sitting just outside of the Strait of Hormuz. There's also a large group of oil tankers sitting inside off the coast of Dubai in the UAE. So you can see those in red on the map there. So they're waiting for the marine insurance coverage to come into place. That's moving through Lloyd's of London. That's what I wrote my PhD dissertation about, actually. So that's all happening right now through the markets. And they're also probably going to wait and see what happens today as far as kind of how the week starts from a kinetic perspective with the U.S. and Israel, and even some of the Gulf Cooperation Council countries, defending attacks from Iran on the Strait of Hormuz.
This is that live radar map, Rockford, that you were referencing there within that last answer. So you're saying that here in the red is a bunch of ships and stuff, some of these tankers that are just placed there and they cannot move. Okay, interesting. Thank you so much for providing this context and perspective. It's kind of hard to see all the details because, it's so zoomed out, but I really appreciate that. Okay, this brings me to my next point, though. Strategic petroleum reserves. Could they meaningfully offset some of these supply disruptions if this conflict does continue for a while?
Absolutely. So all major countries, the G7's meeting today to talk about this very issue. So all major economies have agreed to keep 90 days worth of strategic oil, and some have natural gas as well in storage, in order to be able to weather this exact kind of storm from a geopolitical perspective. So yeah, that's probably happening. I would suspect that's happening in the next 24 hours. So there'll be a major release of all the strategic reserves of the largest economies in the world. That will by itself cause oil prices to drop in the short term. And because it's 90 days, I think I've been watching this very closely. I would be surprised if the Strait of Hormuz was still facing major risks from the Iranian Navy. And just the Iranian forces, including their land-based forces, in 90 days. The Iranian Navy is essentially gone. I think they have one ship still in Sri Lanka, but that's it. But they still have some things they can do. They can deploy mines. They can use small civilian boats or even dhows, the sort of local fishing boats, to try to deploy mines. So they can be very creative, which they are. But that being said, as far as it is 30 miles wide. That doesn't sound like a lot, but it's a lot more than the Strait of Singapore, which is 2 miles wide. So in some ways, I think that the markets will take care of this, and everyone will be actually pleasantly surprised that oil prices go down, and therefore U.S. gasoline and diesel prices go down as well.
Well, Rockford, I love an optimistic outlook. And I just want to say thank you to my producer, Ryan, who was able to zoom in a little bit more on this map just so that we could see more clearly some of these shipments that are just standing there waiting to see what the next move is going to be. Rockford, let's take us back throughout history. What lessons from some earlier maritime disruptions could we look back on right now that would be able to offer some relevant guidance today?
Okay, I have two very recent examples. So of course what happened in the Red Sea and the Bab el-Mandeb around Yemen with the Houthi attacks, that's one. Of course, there's also the infamous Ever Given blockage of the Suez Canal, and so there were alternatives. So those are the most recent, but probably most relevant for the Gulf is the 1980s tanker war. And this occurred during the Iran-Iraq War, so shortly after the 1979 Iranian Revolution. The Iran-Iraq War started. It was a major conflict, and part of Iran's strategy actually rhymes with their strategy today. They started attacking not only Iraqi oil tankers, but also Kuwaiti and other sort of Gulf Cooperation Council country oil exports. And therefore, it's called the Tanker War. Marine insurance spiked then. The U.S. sent a lot of Navy assets there to start escorting tankers again. So that all rhymes. What happened then, which I think we might see happening this week, would be Certain Gulf Cooperation Council countries reflag their tankers as U.S. tankers. Therefore, an attack on that tanker is an attack against the United States. Anytime a ship has a flag, that's the sovereignty over that ship. And we did this in the 80s, escorting Kuwaiti tankers out through the Strait of Hormuz, and the Iranians backed off. They had actually a lot more naval power at the time. So right now, I think that could happen again, and it would be another thing that would keep marine insurance prices low, keep the oil flowing, keep oil prices low, and therefore that ripples through the global markets to keep U.S. gasoline and diesel prices low as well.
Well, it's good to know that we have some other examples to look throughout, just to, again, give us that relevant context and also guidance as to what could happen going forward. I know people like to plan, and the uncertainty is something that most people don't like to see, at least at this moment. You mentioned right off the top of this conversation, it's not just obviously oil that passes through the Strait of Hormuz. We have other goods, other services that have to get through there. So when we talk about the supply in general, what else could be impacted because of the constraints there at the Strait?
I love that you asked this question. So everyone's focused on the oil. They should be focused on the natural gas. So probably the most important strike that the Iranian military has done to the global economy is actually the strike against the Ras Laffan liquefied natural gas export port of Qatar. And Qatar and Iran share the world's largest natural gas field. Qatar is the largest exporter of natural gas in the world. Most of that natural gas goes to Pacific Asia, China, Japan, South Korea, Singapore, some to India, some to Europe. None of it comes to the United States because we actually also export liquefied natural gas. But that disruption is very important for the economies of China, Japan, South Korea, Singapore. The U.S. does have the capability to surge liquefied natural gas exports to those Pacific economies, so that may happen. So we shall see. Same for Europe. We could surge. The United States could surge liquefied natural gas exports to Europe as well. So we shall see. But that's a really important story, and I'm glad you raised it.
No, of course, and I appreciate, Rockford, that you have joined us here just to offer some more context on this entire situation. People are watching it closely for several days now. We are already over a week when we talk about how this conflict has continued to escalate. And I just want to bring us back one more time again to this. It's a live image, this live radar system there out of the Strait of Hormuz. So Rockford Weitz, a professor of practice of maritime studies at the Fletcher School at Tufts University. Again, I really appreciate that you were able to join us here today. As we are following this very closely, oil prices, the price or the impact of the stock market, also everything having to do with the economy, people are watching closely. So Rockford, I look forward to checking in with you.
You're most welcome. Anytime. I'm watching it closely, too.
Of course. Thank you so much. You take care.
You're welcome. Thank you.